All right, this is why you need to start investing as a teenager. So we're gonna go do an investment calculator. Let's say you are 16 years old and you are going to retire at 67 and you currently have no savings, but you're gonna contribute $100 every single month. Now, if you invest this into an S&P 500 index fund, which is just a bundle of funds like all the stocks in the S&P 500, that's the 500 largest companies in the United States, on average, it gets about a 10% return over the last 30 years. So if you make 10% on your $100 every single month, by the time you retire, you will have contributed $61,200, which isn't all that much. You definitely can't retire off of that. But your growth on that is going to be $1,853,000, leaving you with almost $2 million in retirement just by starting at 16 years old, $100 a month. Now, let's compare that to if you waited for 10 years and said you were 26 at that time, you retire at 67, you have zero in your savings, but you're going to start contributing $100 and you're going to get the same 10% return. Now, this may just because you have the excuse of, oh, I'll start for retirement after I'm done with college, which you should be done with college by around 26 years old. And by then, I will have a little bit more income, so I'm going to start saving then. Check it out. Let's calculate it. So your contributions are going to be $49,200, which is a lot less than, $20,000 less than what you had before, right? Oh, it's not even that. It's $12,000 less. $61,200 when you were 16. But it's out your growth has dramatically decreased. So your growth is $650,000, leaving you around $700,000 for your retirement. And that's just by waiting 10 years. So by investing earlier, starting at 16 years old, you can have almost $2 million in retirement. Now, if you are younger than 16, even better, right? Like if you were a 14-year-old, check this out, 14, just 2 years more. Let's calculate it. It bumps it up over $400,000 just by starting at 14 years old. $400,000. That's how much more you're going to have in your savings when you go to retire. Now, if it were me and I was starting this, I would do it into a Roth IRA that is an individual retirement account, and Roth is a designation that allows any growth that you have in your investments to be completely tax-free. So you're not even going to be taxed when you pull this money out. This $2.2 million that you have to pull out from growth is going to be completely tax-free. And that is why you need to start investing